The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more, do we go into the breach, dear friends?
The following takes place between 2 p.m. and 3 p.m.
So what do we have? Well, we pushed the market higher first thing in the morning, opened lower, went higher. There was no volume throughout the entire day. It's just now starting to come in. We just now have 3.7 billion shares, but most of that is in the last, 30 minutes. Saw a lot of shorts run out early in the morning, and you got to start scratching your head this time of year thinking, okay, is it just everybody's left for the Hamptons already and leaving early, and they've left the B team there with one order? If you haven't gone through a Hamptons vacations cycle before, basically they get the B team people there and they say one thing: if you let this market move as much as a twitch, I'm firing you when I get back. I don't want to see anything happen for the next week while I'm off having fun with all my other rich buddies out on the Hamptons. So you guys better get it all together, get it wired, and don't call me and don't cause any problems. That's one thought, but it seems a little early. That tends to happen about Wednesday next week. I thought maybe since a lot of the early movement Friday, Monday, Tuesday, that was a possibility. But the action today, especially in options from yesterday to today, is quite puzzling. I've only seen it once before, so there's not enough to see out here that I can say it's a definite signal. If it does it again, well, I'll do it. The market went down fairly sharply the first time, but what they were doing was out there was they were getting rid or pulling back in the out-of-the-money calls. And I'm thinking, out-of-the-money puts. I'm thinking, okay, well, there were 100 of them there yesterday. Now there's 20. So someone got rid of a bunch of calls and stocks. And, if you think the market's going up, you just let them expire worthlessly. Why do you need to get involved? So I was thinking, well, maybe this morning crude just gaps down. Everybody, I saw 15, 20, maybe 30 articles in the last 24 hours all about how crude, U.S. crude is going to $80 a barrel. And then I go, well, that could be it. There was a handful of things I thought it could be. Now, you didn't see that much of a movement in crude. Maybe see some tomorrow. I'm thinking tomorrow, I've kind of gone, it just looks like there's nothing going on. And the reversal today on extreme and push up on very light volume makes me think that something's up for tomorrow. And I'm just wondering, with the TLT down there at the bottom, is this going to be the day that we just jump the creek down there below that 116 level? I don't know what it is, but I got a very itchy feeling. And generally, I have to pay attention to those feelings. Sometimes people just say that they're their guts. I tried to get as many, rummage around and find as many out of the money, close to out of the money puts this morning. I added one in the newsletter that had a fairly large amount of, still had them. I was kind of lucky with a gift on it and that they pushed that up. Had some already and in part of the tech sector, and I just had to sit on them. One nice thing, as we did in the webinar last night, is if you lost 50 cents on a $100 stock, would you even think about it the next day or even the next hour? Would it just have gone away a 0.5% loss? And I can't even remember any 0.5% losses. I would say no. So, the risk reward is amazing right now. And everything tells me, I was up to 3 o'clock last night, or this morning, looking at it, everything said lower. So when I started seeing the market open a little lower, I thought, well, okay, here we go. Then they pushed it up and literally on no volume. Watching stocks move that normally take 1 million shares to move a buck, we're moving higher on 100,000 shares. Anything that had shorts in it, they just ran. And most of those have retraced to the earlier morning lows already. So that's kind of a good signal. We continue to see stocks like we talked about it yesterday, like here and, well, some of the CRISPR stocks are going nuts. Anything that seems like it's a kind of a gamble, seems like everybody's piling all over it. I talked about how many times I've seen that right before a turn in the broad markets. Not in the Russell. Russell continues to look pretty good. NASDAQ, S&P, Dow all look like a truck can run over them at any minute. I don't know what's going on. It could be anything. Could be Mueller taking out a contract on the president. Could be anything. Who knows what's going on out there? A lot of times it comes out of left field. But I've thought all the things it could be. I would have liked to seen, I thought it would be crude. Let me put it this way. All week long, I thought that crude would really reverse and drop and open like a buck and a half, $2 lower one morning, because just so many articles about crude going to the moon. And it reminded me of a time when nothing you could hear but peak crude. And I'm hearing the same thing. There's so many more people using it. Well, they're opening up. In fact, we'll find out tomorrow at 1 how many more of these wells that produce oil they're going to start again. But we've had 8 weeks of pretty much constant, maybe 15% more wells than we had 8 weeks ago, 20% in the U.S. I know it's a fungible product and we can export it, but my guess, as one of our previous hosts at one time said, the best cure for a high price is a high price, and I think we've got that high price. So you can give me a call today at 877-927-6641, and I think you should. You can email me at path@tfnn.com. And, of course, you can always post a message in the den. It's been kind of quiet. This has been one of these pullbacks that has been almost like a glacier today. It's been slow and painful. But we'll continue to keep an eye on it for you. We've got a lot of stuff going on today. History, which we'll do in the next segment. Then we'll get to some charts. But give me a ring, 877-927-6648. Thanks to all the people that showed up live last night to the seminar. We packed it with every bit of an hour. It was 10 pounds in a 5-pound sack.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Then it's all just a little bit of history repeating.
The first web server goes online this day in 1991. Tim Berners-Lee on a NextCube at CERN, the European Particle Physics Laboratory in Geneva, Switzerland. The launch of his first server is considered the first public release of the World Wide Web. He got a bunch of prizes, including the Turing Award maybe a year or two ago. Knighted by the Queen. And, oh, that reminds me, we probably should dedicate the rest of the show to the royal wedding, shouldn't we? I know how everybody's into it. Anyway, Tim Berners-Lee started the first web server on this day. I kind of want to say that maybe it wasn't the first web server. I remember pinging a Coke machine at MIT and another one at Caltech to see how many it was. It was kind of the same thing, very close. His big claim to fame, though, was coming up with the algorithm to let the World Wide Web scale and have the basically what we have now. He came up with the algorithm for figuring out how you could put billions of people on it, and it seems to have held up amazingly well. Most things never scale this way. There's a Turing Award. Yes, there is, for a computer, kind of a computer hardware, software kind of thing. I don't know how much money they give. I think it's $500,000, but it's pretty big. Yeah. Turing was, for the movie, you would think he was some kind of code-breaking god. There were a lot of people there that were as good or better than him. I think a lot of that has to do with politics. He was actually much better after the war in coming up with the original ideas for computers. There was a big push in that movie to get rid of all the work that the Polish scientists did before the war to break the first version of the Enigma, and no real discussion of it in that movie, because it may have taken away from the cachet that Turing has. Still think he was a great guy. They just try to push it that he saved 2 years of the Second World War all by himself. Kind of a big stretch there. Anyway, Tim Berners-Lee won the 2016 the award. Anyway, make sure and give me a call. Email me at path@tfnn.com. I know it's quiet. People are already thinking about sneaking out, which is not allowed. Not allowed at all. So let's take a look at the volume again as we're going through here. 3.8 billion shares. So it's going to be a light day yet again. And we had a little bit of a push to the downside one day. Volume did increase. Every time we've pushed to the upside, the volume has decreased. So I don't think that you can make a case that that isn't happening. Guess what you can make a case is that it won't matter maybe next week come Wednesday as we push into the 3-day weekend. And most of those people that are headed to the Hamptons are probably going to be looking at New York City and Manhattan in the rearview mirror come Wednesday evening, if not Tuesday evening. Seems like every year there's a new, it's one day earlier out here, but we didn't do that. Didn't stay below for long. Okay. What else do we have going on here? That's about it. Question about what I see in the TLT. So we'll answer that one first. You know, when these things just hang out at lows, like this has, in fact, let's clean this up so you can see it a little bit better. We're down here, and the volume, what was it? 12.8 million shares on the 15th compared to February 21st with 12 million shares. So you got the volume as you've gotten into that candle, at least close to the same volume. The energy was just a hair lighter off this April 2nd high in the TLT. So if you're using this, as I do, because I'm not a real bond guy, James Bonds, you can look at it. But you had a heavy day down. You had a little bit of shorting. We've kind of gone out here. Now the question is, we've gone below the previous low. Volume is going to be light today, but we did have volume a couple of days ago. So what do we wake up to tomorrow? Does this gap up to 118 or does it gap down to 114? And I would say even with a light volume, the one thing you don't want to see this thing do is close at the lows today, because then that opens up the door below. And that's what you don't want. A lot of stocks, very interesting action. Everything I see says Apple should want to close about 185. It looked like it could get down to 180 earlier in the week. That kind of changed. Tried to push it higher. It's kind of rolled off a little bit. My guess is that this does get down to 185 for tomorrow's expiration. Also saw some other stocks. See if we've in my list here on NVIDIA. NVIDIA showed that maybe 245 was going to be the top of what you could expect yesterday. NVIDIA, they pushed it hard, 251.50, and that didn't last for more than a second. Glad I was fast on the little mouse finger and I could get some 250 puts on it. Unfortunately, not fast enough to get it in the newsletter. We'll see how these things close and whether I hang on to them. Apple at 186.69 the last clip. Like I said, really looks like it got down to 185.10 the other day, and I think that 185.10 is probably where we're going to see that get tested tomorrow. Just everything is lining up that way. Now, options expiration, one thing you should know is you should expect the unexpected. I'm expecting the downside. You could just as well expect the upside in the market. Now, one of the other questions is, do I still see something like 268 on the SPYs? And the answer is, 268, 269. Certainly could see that. Little doji out here today. But yeah, 268 wouldn't be any kind of surprise for me for the close tomorrow. Question is whether or not they just opens lower and continues lower, or opens higher and then they run it by the end of the day after the options premiums are out, or whether or not we get the surprise that I think that the option market has been telling me, and maybe even the actions of what's going on. Okay, question in the den from Bill. He says, I'm interested in your opinion on GE. Have been involved with it most of the year. I don't know what involved means. My belief, you're going into 187 million share high today. That was on April 20th, 1505. You went above it, you're going to close below it. You're going to do so, what do we got, 40 million shares? You're going to do so on a fourth of the volume. I'm going to think up some very pithy words to describe how bad I think GE is and what I think will actually happen to it. But everything on this says lower pricing, and we'll talk about why when we come back.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Besides a horrible-looking chart, this thing's got a monster amount of shorts in it. And my guess is those shorts will do one thing, and that is try to get this thing down and hold it down under 10 for a while. And by doing that, they will force people, they'll force funds to liquidate it. Many of the funds have a charter. They will not hold stocks under $10 because of the huge volatility of stocks under $10. And a lot of the leverage that you use is based on stocks. And their basically their risk profile, which is greatly exaggerated when they're under $10. So a lot of people put that in there, that we won't hold these stocks for more than 3 months under $10. So the whole thing is this general war that opens up at about $10 on a stock. My guess is that General Electric, in the next pullback in the market, goes down to that 10 level. They kick it as hard as they can for a while, try to keep it down under that $10 and get rid of it. If there's any value left in the stock whatsoever, then maybe there's a buy at the end of that. My guess, though, is when they start peeling back the onion that is the set of books that these guys have, you might find that this thing is absolutely worth nothing. That would be it. Anyway, keep an eye on it. We're off 3 on the S&P cash. We're off 20 on the NASDAQ, off 58 on the Dow. Not a lot of volume up, not a lot of volume down either. So we'll continue to keep an eye on that. What do we have? Okay. Just going to look at a few on. Let's go through some of the earnings. I forgot to say, after the bell tonight, we've got AMAT and Nordstrom. AMAT, let's take a AMAT. I don't really have a lot of clues. Just the way that the rest of the sectors are acting in this particular chart that we talked about, it looks like an ABC down has already started before the earnings. Volume and energy off this April 25th low has been pathetic compared to the volume down on this April 17th high down to that April 25th low. So there's nothing that looks good in this. Cisco came out with numbers that were okay. It's down a couple of bucks. Walmart tried to go higher earlier in the morning. Everybody was talking happy talk. It got to $87.59 WMT. It rolled over. I'm not saying that market can't get up tomorrow, but man, does everything look like a kind of a very dark cloud with a little bit of lightning around it when we look at it. This one's kind of an ugly candle here already in Walmart. Let's take a quick look at Cisco. I just don't, in these big cap stocks, I just don't see anything that really looks good. This gap down could be pretty nasty. In fact, we were talking about Cisco and AMAT and a handful of these others that could be 3 gap plays to the downside. You gap below 42 bucks on Cisco tomorrow morning. That would be the first gap. The second one comes in at 39, and then the last one comes in at 35 bucks. So conceivably, if we've got bad news in Cisco and this does gap down significantly, you've got a fairly decent play back down to the $35 level. It may take a month or two to get there, but this thing set up like a lot of these pretty poorly. You have in Cisco a fairly decent 72 million share high that came in on the 28th of February, 45.56. You went over it with much lighter volume, 23 million shares on March 13th. Came back into the trading range. Went back over it again on May 10th with 20 million shares, so another 3 million shares off that, 23 million shares off that 72 million shares, and you gap down. And just all of them kind of look that way. These all things look like they've kind of made some highs for a while and need to get back. Now, this one just looks worse than the rest of them. I've always was kind of amazed that this thing held up as well as it did with the amount of shares this thing has. But, you know, they've been working on that share buyback, which has helped some, but it still is problematic, at least the way I look at it. Another one getting the loser horn today is certainly going to be, do I have the loser horn? Where's my loser horn? It doesn't get a winner horn. It doesn't get a, oh, there's the one. Okay. So, what was I talking about? Net teas, right? NTES, is that right? NTES, yeah. Okay. So this one dropped the chalupa back through the previous lows that had already been pounding on the lows. This is what I suspect the chart in the TLT could look like in the morning with any kind of negative news whatsoever. NetEase down on 4 million shares through the last low, which is 252 on September 28th of 2017. Let's call it 1.25 million shares to the 4 million shares we already have today. So that's blown things out for a long while in NetEase. You got a fairly nice high. The next low comes in at 207.09, which is the December 16th, 2016 low. And I'm going to say that that's where you're headed back to 207.09 on NetEase, who's not easy at all. Okay. My brother worked at Jack in the Box for a small amount of time. Pretty nasty, but he could walk there, which was important. So he got enough money to buy a car and then got to work at McDonald's or somewhere else. I forget what it was. Anyway, Jack in the Box dropped the chalupa. Yeah, there's a mixed metaphor. Another one down, fairly decent volume. Looks like it's headed to $82.65. That's the March 28th low. That had a little under 400,000 shares. You already have 2 million shares today. So whether it can blow that out fairly quickly, don't know. But my guess is that you want to hold on for a low around $78.90 if you thought that you wanted to go long these at all. Let's see if I've got anything else out here. And the one that got the worst, JN, is one of these one-trick ponies in the biotech field. This one blew through to new lows today. JNCE, they reported, and it wasn't good, on their one study for the one drug. And yeah, that's about it. Down to $11.48. You got a low back here at $11.05 to the August 10th, 2017 low. That looks like that is where it's going to go. Okay. Continue to keep an eye on all this stuff. Okay, let's take a look at it because we talked about it. Somebody wants to take a look at Canadian Goose. All these retail stocks going higher. The question is whether or not these things are doing well. Canadian Goose, not so much. It's up here on fairly light volume. We'll cover that when we come back. From this message on most of TFNN.com.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks! Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
The Taz Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the Taz Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the Taz Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the Taz Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
And we're going to go right to Muhammad. How are you doing today?
How are you doing, David?
Good.
Great, great. I was wondering if you could take a look at Celgene. I bought it yesterday trying to bottom fish. I think it kind of broke its support. That little support at around 81.50 or so. So I'm just wondering, where would you see it going? It seems like it's heading a little bit lower, at least for the time being.
Yeah, I see there's a gap. The last time it got close to it was April 15th of 2014. That's at $66.85.
Wow, that low. Oh.
It's broken all the support. It's done it with volume. Now you got a little gap off the top, but there's two big gaps. This first one from about, well, let's zoom in on it so I don't have to squint so badly. You got your first gap down on the 23rd of October last year. You got another gap on the 26th of October. So what you're looking for is one more gap down that size. This pretty much sets up the criteria for a three-gap play to the downside. And what you would want is this thing to gap down about that size once again. I have a white paper out on a three-gap play. You probably want to email me at path@tfnn.com. And I've got some examples in it, and I'll just email it to you. Anybody else also. But you get two gaps like that, look for a third. I'm not talking about these kind of little tiny ones out here that are $1.50. I'm talking to these massive things that look like they're $8 and $7. You know which ones I'm talking about here?
Right.
Yeah. You get two of those. Look for the third, a big third one to set the low. And that one could take you right down to that level, those levels that go back a number of years. But it looks like it's broken all support. I don't see anything out here that says that's found anything. It's just going to continue to kind of nickel and dime lower, I suspect, to this gap. This gap thing, I think where it's headed is this gap of, what is it, July the 11th, 2013. That had 12 million shares, and that's probably where this thing is going back to. So those are the dates you're looking for. But unless some kind of miracle, and again, drug companies can come out with new drugs. But if you were just looking at the chart, not thinking anything differently, I'd say you want one more gap. You want this thing to test 66.85. You want to do it on a very light volume. And then
Okay.
you set up some trading ranges. Are you stuck in this thing?
Yeah, I bought it yesterday, so I was looking for a little bounce.
Yeah.
but
I
it
wouldn't be
went the
looking
other
for a
direction.
bounce. I wouldn't be looking for a bounce in this one. There's some that
Okay.
might get it, but
Okay.
not. I don't think this one. The question is whether or not, even in this whole sector, that you got a anything other than kind of just a little move to the upside in a down move, like in the IBB. In fact,
Right.
the XBI has a nice little Gartley pattern in the thing. Let's get back down here to this. The SpiderTech Biotech ETF has a nice little Gartley pattern that looks rather bearish too. So nothing around or in the biotech world right now gets me too excited, because literally all the charts look pretty horrible. I want this thing to come back and base out, but this XBI, pretty good Gartley pattern, no real energy on this C to D leg, so there's not a whole lot out here. This thing wanted to go, the projection was 94.55. We got to 94.08, so maybe there's a little bit more on the end of this, but there's not much. A very light volume day on that.
Okay. There are exceptions. Have you checked out Loxo, LOXO? It's also a biotech. It's a newer biotech, and it's kind of like all-time high today.
Yeah, I can't get real excited about going long much of anything into very light volume next week. I'm thinking that maybe if I want to either short or go long, it's probably going to be after the 3-day weekend, after Memorial Day. It's going to be tough. You got 2 days, Monday and Tuesday, to get much going. Those are option rollover days, so you're going to have one up and one down. Probably going to be the same place on Wednesday that you got, and then all the volume's going to start evaporating probably by 2 o'clock Wednesday. Thursday's going to be light. Friday's going to be, everybody's going to be vacant. Okay?
Great. Thank you so much, David.
You bet. We're going to go to David in Framingham. How are you doing today?
Hi, David. How are you?
Good. I haven't had a chance to look at AAL today, although I imagine it's doing a little better.
It's down 11 cents, I think. And I was wondering, is the oil ready to top, or do you think it's topped out already?
I got into the SCO thinking that we'd gap down. I don't know if you heard the beginning of the show.
No.
But I thought that one of two things. This thing was going to gap down, or we were going to see like the TLT open below that 116 level.
Okay.
There was something that was going to get the market headed lower. I don't know what it is. It may be oil tomorrow, maybe something. To get the pattern I liked, it would have been oil today. I don't think you're going to get oil tomorrow, because going into the weekend, gold sucketh. Yeah, and people are going to be looking for places to park their cash, and it ain't going to be in gold. So they're probably going to go to oil. I don't know if oil goes up. I just don't think it goes down tomorrow. So that kind of opens up a window before, maybe Monday or Tuesday for oil to go down. Yeah. It may go down all through next week or something. But tomorrow, I think it's kind of a hard thing to get people to not pile in there. I know I just smell highs in oil from the media, financial infotainment. Everything tells me that we're pretty much got everybody on one side of the boat. All I got to do is jump off, and they'll all fall into the water too. So, but I'm going to say, could it happen tomorrow? It could. I'm going to say much more likely, though. It's probably, if we're going to see the downside I'm looking for tomorrow, it's going to be probably in bonds or something else that I've never heard of. I just don't know what it is yet.
Yeah, David, when you look at the oil, which oil do we follow, like the Brent or the WTIC?
I do the WTI.
Oh, the W, not WTIC, but WTI?
Yeah.
Oh, okay.
So I don't I don't trade commodities that much.
Right.
I just, when they go to absolute extremes, I get interested. Okay. The day-to-day up and down, I don't know. Maybe it's because I'm not interested. Maybe there's not enough money in it. Maybe my base hit ratio isn't that good. But I I love to buy when there's blood in the streets or euphoria in literally anything, and commodities are another one of those. That's why I probably don't talk that much about them. But that's about it.
Yeah.
You want to hang on?
Yeah. Okay, I could. Yeah. Thank you.
Okay, we'll bring you back for the closing segment, and take a look at this market, which is down 2 on the S&Ps, down 13 on the NASDAQ. Dow's off 55.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
One of the keys to success in anything is the ability to make new distinctions. So what new distinctions are you making to achieve even more success in your life? When it comes to trading and investing, I wanted to become the best of the best, which is why I went on to make new distinctions. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest have been tracking my newsletter signals, which have earned me the ranking as the #1 market timer in the nation for the S&P 500 in gold. On Wednesday, May 23rd at 5 p.m., I'm going to share with subscribers one of my newest distinctions, which is how to follow the money and do so in multiple currencies. You see, money has to flow somewhere, and with the world getting smaller and smaller each day, you and I can identify exactly where most of the money in the world is flowing. Sign up for Mastering Probability by coming to the homepage of TFNN.com to begin your 30-day money-back guaranteed trial membership and learn the exact tools that I use to time the markets. And if you can't attend live, don't worry, because the workshop will be archived on your members page for the next 30 days. Sign up today.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And, we're back to Dave. Anyway, what else do you have?
Okay, so I was looking at the pattern on this. So it still looks like it's still headed up towards the 47 on American Airlines, David.
Well, you need the oil.
Yeah, we need the oil.
You need you're probably not getting that without the oil. You got a doji here. Good chance that this doji is either turn lower tomorrow or the halfway move higher.
Okay.
So if it's the halfway move higher, you got your 47.
Okay.
If it pulls back at all tomorrow out of this gap that exists from let's see, what was the open on that? 43.39. Closes below 43.39. Then it's going probably back down to $40.55 first before going to 47. So you got a little bit of room out here as long as this thing does not close, significantly lower. You're
so
fine.
bullish on this oil here. Everybody's jumping on that, like you said. You're all jumping on one side of it.
I was talking to somebody either this morning, I can't remember, I was talking to a handful of people, but I've seen now, I went back and looked at it, I've seen 30 different articles now, all saying the exact same thing, written by different people.
Okay.
And that is crude's going to 80.
Okay.
And when I see that in 24 hours, now maybe I just noticed them all in the last 24 hours, but they all were fairly new articles within at least they said that they were written in the last 24 hours. Whenever I see a deluge like that, the first thing that it does is make me just think, okay, this is it. There was the old saying during the, trying to remember what it was during the 20s when Joe Kennedy had the guy that shined his shoes start talking to him about stocks.
Oh, okay.
And he sold everything.
Okay.
He sold everything. Anyway, thanks for the call.
You, David.
You bet. In the meantime, sell when you can, not when you have to. We'll see you here tomorrow. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.